You also said not too long ago, you weren't forecasting, you said 2 rate hikes this year, possibility of 3. So let's start with, what do you have to see, Dennis Lockhart, to be on board for the next rate hike?
I am, let me put it this way, I'm framing my decisions related to, let's say, April, June, and thereafter on 4 principal criteria. First is the growth numbers and how the growth seems to be trending. Most importantly, are we sustaining momentum in terms of growth? The second would be the employment numbers, and I would be using a kind of threshold of 200,000 payroll jobs a month as a good indicator of a continuing strong jobs picture, employment picture. I would say at the same time that as we move forward, if we continue to make progress in the economy, you would expect naturally that that jobs number would decline. But for the moment, I'm saying 200,000 a month as a kind of threshold number.
Okay.
The third aspect would be inflation, and I'm paying particular attention right now to core inflation and trimmed mean cuts of inflation to try to understand the underlying strength of upward price pressures. So that's the third, and the fourth would be inflation expectations and the direction that inflation expectations apparently are going, or the explanation for break-evens that seem to be declining.
Well, and that's been is that one of the factors? Is inflation expectations getting a lot of attention from all you Fed officials now? They sunk, they came back, and then they sunk again in the beginning of the year. They were recovering. But your inflation dashboard, the Atlanta Fed has so many cool indicators, 30 inflation indicators on that dashboard. And I believe the last reading that you mentioned in one of your speeches suggested that it had ebbed a little bit, but inflation expectations was one of the things that was not in the plus column. I think it had a little bit of a down arrow.
Well, there has been some retracing of the inflation expectation numbers as derived from inflation compensation and securities. I still hold to the view that what we saw earlier, which was a deteriorating picture to some extent, was really based on liquidity and risk premia, not fundamental unanchoring of inflation expectations. And my working assumption continues to be that inflation expectations are reasonably well anchored around our 2% target. And the recent retracing is comforting. I don't necessarily think, problem solved, but it's comforting.
Are you in the camp that says it would be not only acceptable, but even good for inflation to overshoot its target for a while because it has undershot for so long? The implication of that seems to me be more caution and an even longer period of time before that next interest rate increase comes.
Well, obviously, I'd like us to sort of have a soft landing around 2% and then sustain something around 2%. That would be the ideal world. But some overshoot for a limited period of time, I think, considering what other benefits that might have for the economy, could be an acceptable situation. If we get above 2.5%, I would begin to start to get a little bit nervous. And let me make another point that's important, because the committee has reiterated its position that our attitude toward inflation is symmetric. That is to say, we think the cost to the economy of a shortfall in inflation are equal to the cost to the economy, or similar to the cost of the economy of an overshoot. So we're not viewing 2% as a ceiling. And I think that suggests that some tolerance of overshooting 2% would be acceptable.